Early this week, we learned that SoftBank was going to be essentially bailing out WeWork. Um, that's not nearly as altruistic as it sounds. So SoftBank is WeWork's largest investor, and they were profiting greatly when the company was getting private market values of up to $47 billion. As it turns out now, SoftBank will be investing about $8 billion, roughly about 1.5, 1.7 billion rather, going to the former chairman Adam and founder Adam Neumann, and the rest basically just shoring up the company's finances and basically attempting to restructure the company into something a bit more rational. There's a lot to unpack from this. First of all, one of the first lessons I was taught as a trader is don't put good money after bad. And I do have to wonder what SoftBank's up to here from that point of view. Are they really just trying to stabilize the investment? Do they feel that this money will be well spent, or does it just forestall the inevitable? I really can't answer that for anybody, although I'm always very suspicious when you see something like this where it's basically someone who's got a vested interest being the one bailing them out. And you really wonder whether it's their own self-interest or whether there's a viable business there that they're bailing. It's too opaque to tell, and I won't venture into it, but I do find that to be a yellow flag. It's also very interesting that the former chairman is basically getting paid, call it $1.7 billion to go away. They're paying him $1 billion for his stock, which is essentially, I would think, largely worthless, but there you go. And, matching some loan guarantees and some severance. Thomas, if you're watching this, you can get me to leave for that number anytime you want. I still think that's a fairly cushy out for a guy who basically built the company up and then into something unsustainable. But again, that's between SoftBank and him. I guess the bigger question would be for the economy, and that would run through commercial real estate. And it's tricky because a lot of commercial real estate is not investable. I mean, there's certainly plenty of big cap REITs that you can find, or even smaller REITs that probably have WeWork as tenants. But the problem is with commercial real estate, it's a very diffuse industry. And last week I shared an article that happened to come out. I was out with a friend who's works for a company that develops and manages real estate throughout the East Coast. And it was basically a story that had come out on CNBC saying that WeWork could be as insolvent as quickly as mid-November. So I showed it to this friend, and he kind of freaked out a little bit. I said, "Do you have WeWork as a tenant in any of your buildings?" And it turns out they're the sole tenant in a building they own. He wasn't too concerned because long story short, it's a short-term lease that WeWork has. They're hoping to develop the building and some other surrounding ones. But the bigger implication is there had to be a lot of very nervous landlords, and as a result, a lot of nervous bankers. Because remember, commercial realtors, commercial landowners, commercial developers, commercial managers, they own their buildings not outright. They have a lot of debt on those buildings. And so if you've got a significant tenant who can't pay his rent, and particularly one who you rented it to at pretty much above market rates, if you've refinanced or if you're sort of running close to the vest, that's got problems. I think this is good for those people because this should buy them some time. If SoftBank is putting in a significant amount of money, it will buy them some time to A, keep WeWork afloat, B, keep the creditors off their tail because there should be some cash flow coming in. And hopefully for them, they can rationalize their businesses sufficiently. And so I do thank SoftBank for taking away one large risk to the economy that could have been transmitted through commercial real estate failures.